Hi, this is a quick video about how to understand our liquidity sentiment indicator. It's easiest to understand if you zoom out from an extended period of time. I'm using I'm using Bitcoin USD pair. I like the Coinbase because there's a lot of volume on it, so it gives a very nice signal. You'll find a lot of noise if you're looking at individual tickers, individual names, and that noise is caused by there's many factors that can affect them. So in any given day, you might be coming into earnings and they're illiquid, yet the market is pulling back because the index is pulling back, and that will affect them. It's much easier to see and understand it in a clean ticker here like this pair, and that's just important to remember. It's good to not try and trade lots of different markets. It's good to specialize in one and learn the nuances of it, learn the things that affect it, whether it be rates, whether it be jobs, if it's the building market, whether it's government handouts for first home buyers. All of those things are going to affect it, and you'll see that in the liquidity. But it's much easier to understand it in something like this. So just quickly here, we can see various things here in our liquidity indicator. This is the average. This is both the same one, but here I've got clicked on just the average time layer. It's in the center. If I've clicked off the all time layer lines, the all time layer lines is this one here. This one is set in the all time layer lines at the moment. These lines are, the thickest line is the closest liquidity, and that's I think 8 periods, and the furthest away is the average of from now to a period 500 time periods away. So this is 500 weeks I'm looking at here. Here we can see this green when we've got most of the time periods down low. We've only got one in a high period, which has bottomed somewhere here. We can see that we've got this tight liquidity here. Again, here we've got tight liquidity. These are periods of accumulation when we've got lots of people buying. If we were in a housing market, this would be in a low rates period, and everyone's trying to buy in the market. That would tighten the housing prices up, and then they would slowly, it would take a period of time to wash out, and then maybe another macro effect where yields start rising, so people have to start selling houses, so that house prices might, discovery might go the other way, and we might get some distribution. These top periods here where we have a top price and all of the time periods from the finest line through to the thickest line all come together, that is a time of distribution, and we can see that clearly below in the averaging. What we know is that all traders or investors have different risk thresholds, and so they enter and leave markets at different times. And so, especially in a market here, a housing market or Bitcoin, people just hold. There isn't a reason. They haven't put their most important money into their house. It's living. It's something that they have to do. Bitcoin, they might have put some money in from there because they believe in it as the new electronic gold. So they've got different risk profiles, which means they hang on for a period of time. As people have become educated, more and more people have wanted to hold Bitcoin, and so we have another large accumulation. Those accumulations take a long time to wash out. So although it looks like this is becoming illiquid, yeah, there's small bits of it's becoming liquid. There's small bits of illiquid in these higher time frames here, but it takes a long time for the people to change their view and to say, all right, here we go, rates have changed. This is March 2024, rates have changed. There's some indecision there. We don't know who's the next government going to be. Are they going to be pro-crypto or not pro-crypto? And all of those things affect liquidity. So we see it takes a long time for people to start to sell out and for it to become drop back in and then start to buy again, and it become very illiquid. And so the liquidity goes up and down, and that's in all time periods. So this is an illiquid period here, and these are much more liquid periods. But if we look at these lines here, we can still see that there is quite good illiquidity in this market, which means that price discovery has happened until we get these very solid lines, and then we know the market is liquid, and we're going to get a price pullback. And at the moment, we're in one of those periods where most of the market, especially in the weekly, most of the market is wondering what's going to happen. When is Trump going to implement, or Trump's government going to implement some good crypto, rather than just grifting, some good crypto government policies which make it easier for the Securities Commission to manage it, and for more people to invest in it, and to use it as a hedge against, say, inflation, or to use it as a monetary store of wealth. So again, in a shorter time period here in the day, we can see we've had, around the election time, as it's got more and more likely that Trump's going to, we've seen a whole lot of accumulation. And again, we can see here that even the longest time periods are dropping. This very fine line is dropping into illiquidity, and we've got really strong illiquidity down here with accumulation. And then we've had it get to a top period where it's really flattened out. Again, we're back into a bit of an accumulation, and we've got a bit of a stall on there at the moment. In any time period, it's going to be the same. If we're wanting to do some scalping, some day trading, we can see exactly the same useful. This is the 30-minute. This is up to date. So we can see here we've had it bouncing to and from in a period here of reasonable liquidity, but because of the changeover of governments and the inauguration, there's been some sharp movements from people saying things on Twitter, I expect, and through to here it's gone down into a very liquid state, sitting down the bottom here, when people really don't know, and then all of a sudden, people have decided, all right, I think that was long enough, and they've started heading down, and it's become illiquid quite quickly in this closest period, and those other time periods have followed it through. Before, with the end of the trading here, I'm in Australian time here, so I'm looking at it at 8 a.m. this morning, which closed the American markets, and we can see it's risen up and it become very liquid again, and with that price discovery has flattened out, but definitely headed south. We've lost 1% or 2% during the last 8 hours, and here we can see the surface here. This closest one has become very illiquid, and so as it's hit this high volume node here, we can see that it's bounced back up. But if we see the underlying here, it is still, even all of these time periods here are still very liquid, and so this was a great, from the top of this, when you could see here, there's a 2% swing in the market there if you're going for a scalp. If we look very quickly, just so you can see it's not one tick. You have to remember that every set of every indicator that you use, every security that you use to trade will have different characteristics, and might not have good liquidity. It might be that it's being used as a proxy, so it's harder to see what its liquidity is doing. Here we go, we're having a look at the NDX, or very similar to the NAS 100, and we can see here we've had a great big accumulation period, and then all very quickly it's become around just before Christmas, we've had a bit of a vol event, and it's become quite illiquid, and then quite liquid, and then from that illiquid build, we've had quite a lot of distribution. But long before the bottom here, we've started to see it become illiquid again, and that is during that period that the grifting oligarchs of the Mag 7 have taken a lot of the money out of the market, and we've seen the Dixie heading south, because money is now going into investing in the Mag 7, as they've had very, very favourable news around them, including today $500 billion. So here we can see in the shorter date, we're looking at days here, the shorter period, we can see it's become liquid again from an illiquid period around the 10th and 13th of the month, and it's just sailed straight through OPEX. If I went down onto a smaller time scale, I think you would see that there's some quite tradable parts of of any given day, where here we can see it's all of the time zones are illiquid. It's tried to gain some, liquid. It's tried to gain some here. Again, that could have been because of the it hitting a volume node or a price that people try to hold. So we've got some surface illiquidity there, and then that's jumped back up. And again, you have a look at this. Just in one jump down there, we've got a 14%, or 0.14%, 1.13% decrease in price. Great little scalp there. You could see that it's heading up, and it's really good to just watch these longer periods of time, because these longer periods of time tell you whether that really is surface liquidity because of a bounce because of hedging, or it is because of a change in the underlying liquidity. Here we can see again it's really trying here, and the longer times are still reasonably liquid, but we've got more than one line down here being illiquid, and that price has sort of leveled out here, and it's over any time period. It will tell you roughly the same story of what's been happening in those. Just remember that any indicator, any security that you use is going to be affected by multiple factors, whether they're yields, whether it's a gold, it'll be affected by yields. The IWM doesn't like higher yields, higher rates. That affects the market. Then they tend to head into the mags, because the NAS doesn't mind the higher rates. They're like long bonds, so they're happy with that. And so learn the things that you trade. If you're day trading, these sort of indicators are fabulous. But remember, there's other things that help you. We give other services. We do a full analysis of the open interest on any given day. And that usually, although it does take a few days for a market to change direction, we can tell you, with great accuracy, whether we're in a flat period or staying in a rising period, just to help you with the tickers that you are trading at that time. And we do VIX, rates, gold. But I hope that that's helped you understand how these liquidity rises and falls using the different time layers. And I hope that wasn't too long. Thank you very much.